My name is Andrew Stotts of the Valuation Master Class, and I want to welcome you to another student presentation. This is the final presentation of an accumulation of 12 weeks of very hard work. So let's get into it. Hold on one second. Ashwin, how are you?
Yeah, I'm doing good. How are you?
I am good. I'm probably more relaxed than you are, given how much time and energy
Yeah,
you
probably.
put into this. But I'm not going to take too much time here. And I've got the screen up, so now we can see it. And I'm
Okay,
going to leave here, and then you take over. Okay.
sure.
Okay. I'm going to leave now, so you can start now.
Hello, everyone. My name is Ashwin, and today I initiate my coverage on Qualcomm, providing a sell recommendation with a 26% downside. I arrived at this valuation using a discounted cash flow, with my assumptions being a WACC of 11% and a terminal growth rate of 2%. My key drivers are the fact that the smartphone market has peaked. Its latest new entry in the ADAS market and the DSM price hike, which is eventually coming. So now, before we go to my key drivers, I'd like to introduce you to Qualcomm. Qualcomm is a fabulous design shop which designs chips for smartphones, high-powered computing, and on-device AI. Their main source of revenue it comes from smartphones, and they mainly deal with Chinese OEMs. Coming back to our stories, the first point is that the smartphone demand has peaked. So, 25%, the global shipment of smartphones have dropped to by 25% since 2017, and there are many surveys which have shown that. People are not really upgrading that often. That when it comes to growth opportunities, we can say also see that it's limited because 97% of all Americans already own a smartphone. So for my second point, it has entered into the automobile sector, namely ADAS, which is automate advanced driving automatic system, and that market is expected to grow at 13% year over year for the next 10 years. Now, the revenue from that market for Qualcomm has improved by 87% year over year in second quarter of 2024. Uh, and they also have landed projects with Toyota and Hongqi, and they've also increased their product pipeline for this sector by two times in the last year. And for my third story, it's TSM is going to increase the prices. First, I'll just tell you the importance of TSM in the world's semiconductor space. So, TSM provides around 90% of all the advanced semiconductors in the world, and the wafers have a yield rate of 80 to 90%. Now, we can see that's impressive because Samsung, its biggest competitor, prefers to buy chips from TSM, which is just because Samsung has a yield rate of 60 to 70% for their wafers. Now, how does this impact Qualcomm? Uh, Qualcomm all of the advanced chips are solely reliant on TSM. And the price hike. So the price hike is price hike forecasted by TSM is they're increasing it by 10% for all the chips, and the next generation, which is the 2 nanometer chip, is going to be approximately double the price of their previous generation, which is the 3 nanometer chip. Now, this can impact the gross profit margin of Qualcomm as it increases their raw material. Now we look at the revenue, the quarterly results. We can see that their revenue has outpaced their COGS, and because of that, we have an expansion in the gross profit margin. Now, when it comes to the constraints to growth, they don't really have much capital constraints. Yes, they were running the business on high debt previously, but as you can see with the chart, they have reduced their debt significantly. When it comes to operations, they are not concentrated in one industry, so they aren't really affected that much. When it comes to market, we know the semiconductor market is growing and the AI market is growing also really fast. When it comes to people, they do have a requirement of getting highly specialized individuals in the company, but but they're doing a good job in that, and they've also been awarded as one of the top places to work by Glassdoor for many years. The As you can see, they make most of their revenue from mobile phones, and they have a lot of concentration in China coming from these Chinese OEMs. So, if we look at the FEMR score sheet, we can see that they are not really doing good in that respect. That's mainly due to their lower ROA, and when you look at the price to sales value, it's reaching to the 2020 highs. Now, this so we have done. I have analyzed the company using the Porter's five forces framework, and when it comes to rivalry among competitors, it has many competitors who are doing the same thing. When it comes to bargaining power against with the supplier, they don't really have that much bargaining power as their suppliers are very limited. Uh, they're mainly dependent on TSM for their chips. Then bargaining power versus customers, they at least in the smartphone space, they target the high over 300 $400 smartphones. They don't really do much in the mid-range or budget segment. So I think their bargaining power is pretty good. When it comes to threat to new entrants and substitutes, they don't really have a lot of threat because designing a chip is a very convoluted process, and there are some companies which have tried but they have eventually failed. So yeah, when it comes to the ownership, the ratio of independent to non-independent directors is higher than the US IT average. And I just like to point out their ownership. The insider ownership is very small. It is pretty much non-existent, and they mainly have institutional ownership. When it comes to the WCB framework, they have a very good they have very good control over their expenses, which is probably the reason that they have very good profitable growth. So when it comes environmental factors, they have a plan to reduce their electricity and water consumption. So I think the environmental factors are pretty good. When it comes to social, they follow the employee health and standard guidelines, and they have certain ISO certifications for their manufacturing plant and their management also. So in governance, they have a 91% of directors are independent, and they have a lot of diversity. So they're doing pretty well in terms of governance. When it comes to my now we'll go to the financial statement and look at my assumption. So I assume that revenue is going to grow really fast because of the two drivers which I mentioned in the earlier slides. Now, when assets, yeah, there's nothing really much to talk about the assets as well as liabilities. No, yeah. So in ratios, we can see that they're pretty good with their liquidity constraints. They're able to manage the liquidity at least for the short term pretty well. They also have a very high uh, times interest earned, so they earn enough profit to pay off their interest payments. So we look at some more ratios, and we've also compiled a two-point analysis where everything looks good. So next slide. Now we look at the free cash flow data. They have a good amount of cash flow, and I don't see the working capital to be changing anytime soon. Uh, the previous working capital changes were pretty volatile because they were entering into new markets like the automobile market. They just entered in 2023, and they have other markets as well. So in the future, I don't think they'll be entering into new markets, and they also have they've established their dominance in the markets that they've entered. So they are even they gained even supplier trust. When looking at the PB to ROE ratio, we can see Qualcomm is slightly undervalued when you compare it to the world and USA IT averages. But when we see the PEG ratio, we can say that it's way overvalued compared to the averages for the world, USA, and Asia. Now, for my valuation assumptions, I'll just quickly walk you through the assumptions. So I assumed a risk-free rate of 2.5%, which led me to a cost of equity of 12.5. Then my cost of debt I've assumed to be 3.6%, which gave me a whack of um, 10.8%. And I've chosen the free cash flow valuation as there's no dependency on capital structure, as well as they do a lot of share buybacks. So I wanted a value which doesn't really change with the amount of share buybacks they do. Now, I've also done my sensitivity analysis. In that, we can see they're highly sensitive to the cost of equity assumptions, and the beta assumption. For the final slide, the risk. So the main risk is that it has a lot of concentration in China. The other risks are the strong dollar doesn't really help its revenues, as majority of their revenues are coming from outside of US. Then the recent risk that they possess is the legal battles with ARM. And also, I noticed a lot of the insiders are selling their ownership stakes. So, just to conclude, I'd like to give a sell recommendation on Qualcomm for the fact that the smartphone market has peaked, and TSM is increasing their prices.
Hmm,
Thank you.
interesting. Um, can you go back to the ratio page? And
Uh, Show page, just give me a sec.
yep, I just want to look at the working capital one,
This one or the other one?
the prior one. So that inventory conversion goes 72 days, 92 days, or 74, 92, 145. If I look over on the quarterly, it's about 130. And I'm just curious what's happening there. Can you explain a little bit more about that?
Yeah, so I mentioned it. So when we look at the inventory days in the okay, no, so this is the inventory days. So the inventory days are pretty volatile because they are not really they are in they were finding the footing in many markets like internet of things, like they were doing smart homes, they were doing automobiles, they are doing smartphones. So I think their inventory days were volatile because of that reason, and now that they've kind of established themselves, they'll have a much more stable inventory days.
Hmm. And you've got a pretty negative view, but if I look at the gross margin, it's so high and it's not like
Yes.
it's collapsing. Is it
So
all about revenue growth?
no, so when it comes to that, I think it's an amazing company. First
Mm,
of all, the issue is, I think it's priced to perfection,
right.
which TSM can't really deliver.
So let's go to the first page then to just understand that pricing a little bit more.
Yep.
So let's say it's trading on 25 times 2025. But again, you've got 11% growth. Okay, it's not huge, but that's not bad. And you've got a 27.4% ROE.
Yeah.
And on a price to book basis, 6.4 times is it's not cheap for sure, but you're getting this 27% ROE.
Yeah.
Uh, tell me more about your concern.
Uh, my first of all, my concern is that they can't really deliver in the AI space that well.
Mm,
Um, then like obviously they're very dependent on TSM. Like the entire world is very dependent on TSM, and there's a bit of uncertainty with their legal battles with ARM. So they have the court date coming up in I think 6 days, but ARM has really affected their revenues quite a lot in the past 1 or 2 years.
mm. So how does it feel to graduate from the Valuation Master Class?
Yeah, it feels great. It's a lot of work went into it, and yeah, it feels awesome just completing it.
Give us a picture of how much work went into it.
I'd say around 300 to 350 hours.
And that's for professional or for
No,
boot camp
that's
and professional?
only for professional. If we include boot camp, it'll be around 500 to 550 hours.
So 500 to 550 hours in the last 12 weeks building a competitive advantage in company valuation.
Yeah.
Did it really pay off? I mean, how do you feel about what you know now compared to day one when you went into the valuation masterclass?
And I feel that I have a lot more practical experience and I know what to look out for. Like I just don't have a theoretical background. I know what are the drivers for many of the companies.
And you valued a lot of companies one
Yes,
after another.
yes.
uh, what was it out of all the different activities that happened? What was it that you would say added the most value to you?
Kind of, I'd say, kind of, yeah. So we valued China Venki in one of the models, and that was a very tricky firm
Mm,
to value because they have liquidity issues. The Chinese market isn't really doing that well. So I think looking at a company which is on the downfall, it, that was pretty valuable.
right. Yeah, that's an interesting one. All right, great. Well done. You've done a great job, and it's been great having you in the valuation masterclass. I appreciate that you always showed up, you always participated, you always had your camera on, and you were part of the community. Not everybody does that, and not everybody did that. So that's something that I see different about you compared to others. So keep that up with the communities that you're involved with.
Sure,
Awesome. All right, we'll talk in Slack. I'll see you soon.
sure.
Another great presentation. And Qualcomm is interesting one. I mean, such a profitable company, but facing some major headwinds. If you want to build a competitive advantage in company valuation, just join the Valuation Masterclass. Come to Valuation